Two surprise moves by two different central banks yesterday have sent global stock markets in a tailspin. The very important currency tsunami came from the Swiss central bank, which removed its peg of 1.2 Swiss franc to a euro. Now, Switzerland has been pegging its franc to the euro for quite some time. The reason being that Switzerland is a very export driven economy. Almost 40% of its exports go to the eurozone. By pegging itself to the euro, it tried to make sure that it is not hit badly by overvaluation of the Swiss franc. As soon as Switzerland removed its peg on the euro, the Swiss franc went up dramatically. It rose 30% immediately. And simultaneously, the Swiss central bank also reduced the interest rates, pushing them into negative territory, so as to make sure that the Swiss franc doesn't get a tremendous boost by just because it had removed its peg on the euro. Now, as a result, Swiss stocks fell by almost 10% yesterday because Switzerland, as I said, is a very export driven economy. And when a lot of the money comes from exports and the currency gets a jump upwards, then there is a possibility that this currency movement upwards would lead to lower earnings, lower exports. That's why the Swiss stocks got hammered. This all sent shockwaves in the world financial markets. In a pleasant surprise elsewhere in the world, Governor Rajan reduced interest rates, the repo rate, as we call it in India, by 50 basis points in a sudden move, which came as a pleasant surprise, and the Indian stock markets went up by almost 750 points. Now, Governor Rajan has been uh, on a tremendous pressure to reduce interest rates for quite some time. And with inflation coming down dramatically in India because of lower oil prices, as you know, India is a very oil import intensive economy. There has been a good rise in stock markets here, and there are expectations that there will be further reduction in interest rates in India. Now, what does this all mean for global stock markets? Well, interest rates are down in India now, and people expect more to come. And the bonds have gone up dramatically. Bond yields have fallen, and it is a great time to invest. India seems to be in a sweet spot, but I still believe that there's going to be a lot of volatility in the world, which will have its impact in the Indian stock markets. Global stock markets are also in a downturn. I believe that a price fall in oil is expected to continue. The immediate thing that I see in the horizon is that global stock markets should keep falling for quite some time now. But over the next 1 week, I expect a lot of bloodshed, after which I think there should be some sanity which will return. Not to say that turbulence is going to go away in a whimper. I think this year 2015 is going to be very turbulent for global stocks, but in the immediate short run, or the next 1 week, I expect more downfall in most global stock markets, including Switzerland, India, US, UK, and other European stock markets. After which, I believe that some sanity should return and we should see a little upward momentum, only to be hit by some further downside later, which I will present next time. So on a day when two central bankers made two very different but very surprise moves, the world stock markets have been jolted. So it's no longer oil that is now impacting global stock markets. There are other factors which have come into play as well. As I had mentioned earlier, there are many global factors working simultaneously. So need to take cognizance and stay out for now. A week should see more downside. That would be a good entry point for investors. Take advantage. Happy investing. Take care. Hi. There has been a steep fall in equities in the Indian market yesterday. Indian stock markets fell by over 800 points yesterday, raising alarms over what's going on. Now, crude prices have been falling internationally. Brent crude is nearing $50 a barrel. In fact, the fall in crude prices should be beneficial for the Indian economy, which is heavily dependent on crude imports. Then, why is the Indian stock market suffering due to fall in international crude prices? The answer to this question lies in something which is very different and off the radar of most investors. That's why they are really getting alarmed at this whole prospect of the Indian stocks sinking. There is a very heavy remittance, inward remittance from various countries, especially the Gulf, into India, and this remittance could get deeply impaired if the oil prices continue to fall further, because it could impact the Gulf countries quite dramatically and their economies. Therefore, they would be paying less to the workers from India who would be coming to work over there, and this would dramatically impact the remittances back into India. Now, how deep is this impact going to be? The remittance industry is very large as far as India is concerned. It is almost as large as the IT services industry. And therefore, you are seeing a steep fall in the Indian stock prices, because as remittances become scarce, the money that would have been used to acquire real estate, land, stocks also reduces dramatically. This therefore deeply impacts the price earnings of the various Indian companies, which are bound to suffer in the bargain. What is the way out? I guess this turbulence will continue for some more time, and the impact of falling crude prices, although is very positive for the Indian economy, will be deeply offset by these reduced remittances, and this is going to dramatically result in lower earnings, and investors are going to be having to factor this even further as they go forward into 2015. I guess one has to watch closely at the crude oil prices, the international prices. As I have mentioned many times earlier, I expect this softness to continue until the middle of this year, and after which I expect a rebound in crude oil prices globally. So, therefore, one can work out one's investments accordingly. Happy investing. Take care. Bye.